I'm looking at a potential 300 pip move. But I could take the entry on a 15-minute chart using the stop loss of a 15-minute chart. And as I spoke of earlier, I can either take a close below this line, or I can wait for a full multiple candle setup below this line. So I could look for something like this, down, a push down, a pullback that doesn't break the top of this line, and then a thrust back in the direction of the trend, and then I could enter right there. I could enter right here. When this comes down and breaks this center point, because the entire formation happened under this line. So now in this case, let's just say, I just drew this by hand, but we're looking now at a 20 pip stop for a 300 pip potential take profit. That's 10-to-1 risk-reward ratio, and I can afford to enter this trade after 5, 6 consecutive trades that don't work out. And I could enter on the 7th one and still walk away with a very nice profit. But the odds are you won't have to do it 7 times. Does that make sense? When we trade, which time frame should we use? Jay, use the time frame you are the most comfortable with, and use the entry method you are the most comfortable with. Later on, when we get into entry methods, I have a number of systems that are really very, very good, in my opinion, for getting into trades, because you get good confirmation, you get very low stop losses and all that. But we're not talking about trading systems right now. We're just talking about recognizing what's happening on the chart as far as price is concerned, and then being able to take advantage of it. You want to know where to place your trade. That's the key. You got it? We will go over trading systems, way down the road, but there's a lot of other material we need to cover first. And once we cover that material, the rest of it will be pretty, it'll fall in line for you, and you'll understand. All right, are there any questions on what I just explained here about this daily? Rich, do you understand that? All right, this is my line that I drew. This is my trend line thingy. Okay, and what I'm waiting for is a close below that line on a lower time frame. So while you're waiting for the sniper setup, how do you mentally track it all? How do you keep track of at any time? Oh, I just showed you that. I don't know, maybe it went by you. What I do is, I don't like to clutter up the chart. If I know this is the entry I want, and I'm looking at a potential, it says 330, let's call it 300 pip move. Okay? So let's measure down 300 pips from the low of this candle. 300 is just about in there somewhere. Okay, so let's grab a line. I think it was just about in here, right? It's 300. Okay, close enough, 275. Now, I'm going to answer your question, Tony. Okay, but how could you be watching 10 setups, waiting for them to be ready? How do you keep track of them all? I understand how you're making up the one trade setup. Okay, when you're looking at daily charts or higher time frames, you're not going to get a trade every 15 minutes. So that's the least of your worries. It may take 3 or 4 days for this price to get below this line here. It could take 3 or 4 weeks. But what happens more often than not is the trader will see a setup on a higher time frame, tell themselves, I'm going to keep an eye on this and I'm going to come back to it, get busy with other stuff, get involved with other trades, and completely forget about it. And then all of a sudden they go back a week later and they say, oh shit, I could have got in here, I could have did this, could have did that, and they're frustrated. So how I do this, and how it's very, very easy, I mark my line in the sand, and as I just explained, I highlight this trend line, and I got to do it again. I highlight this trend line, and I give it a name. Okay, so I know that this is the pullback candle daily, and I know I want to enter short. All right, and then I click OK. Now, that as long as I don't erase that line, that information will stay there. You follow me? And that's the only line I have to worry about because it's the one trade on the daily. And then I just leave it there. Then I go down, and as I said, as we went down to our 5-minute chart, where was that line? You see, I'm nowhere near that entry point right now. I'm a mile away from it. But if price ever comes back down and I say, wait, what is this line again? I right-click, I go to Properties, and there the information's right there. So all I have to do is just leave that line there, and I can come back to it later. All right, Bull Hamster, could you set an alarm? Yeah, you certainly could set an alarm. Well, and we'll get into the alarms because I have to spend one day on how to set alarms and how to set up your cell phones so we can send you an email or a text telling you that a trade is looming. A lot of people get confused in how to do that, and it's actually pretty simple once you get the hang of it. But you are correct. You could set an alarm too. Now, what Bull Hamster is saying is that in MetaTrader, you can set an alarm. Oh, wait a minute. Wait. What am I missing here? Oh, here's the email. I'm sorry. Yeah, so here's how you can set things up to send yourself an email. Okay? And then there's a function in MetaTrader where you can set up alarms. Yeah, it is in the terminal. I don't want to get sidetracked on that, but Bull Hamster is right. You can set up an alarm, and you can set up the alarm to let you know when it's within 20 pips or 30 pips, or when you hit the exact price. All right, Tony, does that answer your question? Does anyone else have a question or comment about that? And here's another thing I want you to see. I want you to see that all of this pullback from here all the way up to here, I want you to see what that looks like on the daily. I hope this comes through. It doesn't. All of that is just this candle forming. And it didn't follow all the way up, which is, okay, can't get everything. But all of that is this candle. That's what all of that nonsense on the 5-minute chart was. Okay? All right, so now I want to move on a bit. Let me get rid of this. And again, I want to reiterate that you can use a close below here. And let's say we took this close below here. Our stop would go to the last high, which is a 20-pip stop. And let's assume that it got stopped out. All right? Because I'm shooting for 300 pips, I can afford to take 3 or 4 shots at this. You follow me? So the next time this comes all the way back, I can try it again. So that's the beauty of doing this way, because eventually one of them is going to go all the way and never come back to a 20-pip stop. Okay? And like I said, you don't get these set up maybe 2 or 3 times a week. So it's not like, you have to monitor it all the time. And by putting the line in the sand and then naming the line, as soon as you see price come back to this line, you say, wait, what was this for? Because after you start looking at 8, 9 pairs and you're doing your regular intraday trading, it's very, very likely that you're going to forget about that great setup you saw on the daily chart or the 4-hour chart or the 8-hour chart. Okay, we're good with that? And I want to thank the rest of the participants in the room for allowing me just to backtrack a little bit. All right, I want to go back to that triangle. What was that, the Euro New Zealand? And I just want to talk about one other thing with the construction of the triangles. And it was a 1-hour chart, and the triangle might be gone by now. Nope, still there. Okay. So in this type of consolidation, one of the things in the triangle that can give you a clue as to when it might break is that you'd like to get 5 touches on the triangle. 5 touches in and out. Okay, so this is where we start. This is touch number 1. This is touch number 2. We don't really have a touch number 3 here. So this becomes our number 3. This becomes our number 4. This over here may become our number 5. Okay, so we're generally going to be looking at 5 touches. 1, 2, 3, 4, 5. And that makes a pretty solid, pretty viable triangle. Okay? That's the other thing that's kind of important to remember. And keep in mind that in a triangle, if we look at this widest candle back here at the back of the triangle, this was 60 pips wide from open to close, not from high to low. Inside the triangle, you will not get another candle that's 60 pips wide. And that can become very, very important as far as scalping is concerned too. All right? Sometimes you draw triangles cutting off the wicks. Which way is correct? Okay. Good question, Tone. What I try to do is I try to catch as many hits as possible. Because we didn't close above this line, these wicks don't necessarily have as much power. So I look for wicks where I can connect 2 or 3 wicks where I just get the exact touch. And if I get a couple of wicks above it, that doesn't faze me so much because it's the close above that area that I want. I could certainly put it up here. All right, and again, there's a bit of subjectivity to it, but I'm a big believer in the closing price. Okay, and we can't do this in this room, but one of the things that I do is I try to give you control, and I want you to draw the triangles. You know, this way I know that you're seeing it right. Do some say the end of a long wick is dumb money? So it doesn't count as much. Yeah, I certainly believe that. Because, you know, a lot of people got tricked right here, and they're saying, oh, look, we're at support. We've got support. And this candle at one point was all the way up here, and it was a white candle. And they say, oh, yeah, let's go long right there. And they all got psyched. Every one of them got psyched and fooled. Okay? So I personally prefer the close of a candle. It's the conservative entry. Yeah, somebody got long here. Wasn't me. You get me? And now that I know that this is a pullback candle, there's no way I'm going to go long here because I know this is a pullback in a down market. This can't go very far. Or it shouldn't go very far. And you notice here how this candle at one point was a solid candle all the way up to the top of this trend line. And you see how it pulled back? It pulled back inside the triangle. Yeah, some greenhorns chase price. And sometimes if I'm not in the right frame of mind or if I'm not rested, you know, I'll bug out and chase a price too. It's just because I'm human. I'm not infallible. All right? Now, there is another pattern here that's a bit more advanced that we will discuss at a later time. And it's another type of wedge, and it's called an expanding wedge. And I'm going to draw one for you so you can see what it looks like. It's like that and like that. This is a case where the wedge is getting wider as we go along. Okay? And one of the ways that this is traded is we wait for the break of this, top of this expanding wedge, and our next target is the bottom of the expanding wedge. And then if we break the bottom of the expanding wedge, we should get a distance equal to the front of the expanding wedge when we broke it. Now, we will touch on that a bit later. It's a little bit advanced now, and it's not a thing that you really need to focus on. But I do want to show you it's another type of wedge that's very, very prevalent in the Forex market. But it takes a bit of time to spot it and understand how to use it. It's one of those things kind of like divergence. Divergence is one of those things you have to train your eye to see. So that was the other thing on this chart I wanted you to see was the expanding wedge. All right? The next type of consolidation that I want to talk about are range-bound markets. And I want to find one here. Okay. Does everybody see that we're pretty much range bound from here to here? Everyone see that? This is what's called a range bound market. All the books tell you, well, this is a range bound market and this is how you trade it and blah, blah, blah. And they always show you this picture. They never tell you, well, how do I catch the range bound market when it first starts? That part they leave out. Okay, we're going to cover that today. What I want you to see in this range bound market is that now this happens to be a horizontally range bound market. There are range bound markets that do happen on angles, and sometimes those are continuation ranges, or they could be a continuation chart pattern like a bull flag or a bear flag. Okay? Now, I'm going to go through this a bit slow. Now, how I draw my trend lines on these ranges, by the way, remember, I believe that closing price is the key thing. In most cases, they would have drawn this out here, and, come on, and down here. They would have called this the range. All right? Now, the way Lou does it, and this is what your Uncle Lou does, it has nothing to do with anybody else. When I see all these candle wicks piercing here, what I'm looking for is where is the lowest price that these guys could not break. And that's where I want to put my range. So in this case, this bottom line is going to go right at these two candles. Okay, you see that? Because neither one of these could close below this level, and neither could this one, 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 this one. You got me? It's the closing price. When we get into candle DNA, you'll understand more about it. But for right now, I want to see what was the dominant closing price that created all the wicks. So now on the top, I do the same thing. I bring this down, and I'm looking at this high and these three. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 candle wicks attempted to close above this line, and all 12 failed. That, to me, is the real range. These wicks are just areas where price tested the range to see if it could break out of it. Do you follow me on that? Just give me a yes or no. And once, I have to figure out how to do the homework thing, so I can give you guys the homework assignment so you can send me, pictures of your screens so I can, check your work. All right? So again, on a horizontally range-bound market, I'm looking for that closing price that kept all of these candle wicks in check. Okay? If this was basketball, this line, all of these are block shots. It's another way of looking at it. Every one of these is a block shot if we wanted to use a basketball analogy. It's been 5 years since I've had to do homework. Well, good for your ass, Sean. You need to do some homework. Okay? Disregarding Pinocchio lies. Absolutely, Bull Hamster. Okay, and if you look at, and again, these are Pinocchio lies, these pin bars. All right, all these pin bars, all of them told a lie. But if you want to know where the true range is, and this is what they don't tell you, look for that last dominant closing price that stopped all of these candles. All right, everybody with me on that? Okay, once we find one of these ranges, our projected target for a breakout of the range will be 1 time the width of the range. So in this case, it's 70, let's say 75 pips. Let's say 70 pips, cheat a little bit. One thing you could do then is you can duplicate one of these lines out to the top, about 70, I'm just going to do it by eye, out there, and you can duplicate one down to the bottom, and that would be your profit target. Everyone see that? Okay, the market is not moving fast. It's just making a lot of ticks right now. But you see, we got a lot of ticks in this little area. If you see this ask line here, So it's not necessarily fast, it's just nervous. Okay? Everyone see that. When we find a range-bound market, we want to duplicate one width of that box out to here. And keep in mind that if you wanted to look for a profit target, you could take half your profit off right in the middle of that box. Okay, it would be a very good place to take some profit target. Take some profits rather. Okay, now keep in mind when we see these range-bound markets, it's usually an indication of indecision. Okay, if I had to build a range-bound market in my box of candles, I need candles that will go from one side of the range to the other in any combination. But it will usually go from one side to the other, bounce, come back down, bounce, go back up, bounce, come back down, bounce. Everybody understand that? If I had to build, if I said build me a horizontal range-bound market, what would you need? You need any combination of candles that go to the extreme of the box and come all the way back. What a range-bound market is made up of. Let's break it down to the DNA now. A range-bound market, be it a horizontal market or an angular market, a range-bound market is made up of a series of triangular moves. Okay, and I'm going to show you the moves here. And I need to get my triangle tool. Just give me a second. Okay, so here's our first triangle right here. And I'm going to draw these just rough, okay? Here's our second triangle. A range-bound market is a series of triangular moves. And the moves extend from one extreme to the other. Okay, everyone see that? That's what builds. If I had to break it down into a DNA, I would need candles that go from one side of the range to the other side of the range in a triangular fashion. Is everyone clear on this? Give me a yes or no. I don't want to move on until you guys, let me know that you're sure. Okay, thank you, Raul, Jean, Kimberly, thank you, Daryl, Brishu, Sharon 2, Phil 919, and Jay. All right, thank you and Mike, thank you, of course. All right, so it's a series of triangular moves. Now, there are certain indicators that work extremely well to give you a clue on when these rectangular ranges are going to break out. We won't talk about that right now. I just want you to be able to spot the range. Okay? Because there's a lot of money to be made in this range. Okay? Inside the range, you can certainly and easily take these trend line breaks. Remember, draw a trend line under the candles that are heading to the top. You see that? And then when we get the break, prices head to the bottom. Then you can draw a trend line from the top back to the bottom. This is kind of ugly here because I think this is the weekend, this gap. Okay? But again, you can draw a trend line under the bottom up to the top. And when we touch the top, you wait until we get below that trend line, and then you can chase it down to the bottom, chase it back to the top, and then back to the bottom again. So there's a lot of money to be made on these in these range-bound markets. And people say, the market is range-bound. I got chopped up. Well, what happens there? If you remember back to one of my I think the first or second lesson, is that every market condition is tradable. You simply have to have a system that takes advantage of that market condition. So this way, no matter what you see when you turn the chart on, you have a possible way to trade it effectively and intelligently. So if you turn your chart on and you see you're locked up in one of these ranges, instead of getting annoyed, you can say, aha, there's money here to be made. And then you can use any number of systems to take advantage of that. Okay, do you see that? So now I want to find one that's more angular. Okay, so I'm halfway lucky today. And I'm going to draw this through here. And I'm going to duplicate this. Now this is not really ideal, but I'm drawing it, you know, as and again, it's not a perfect market. Oh, no, well, this I can bring this up to here actually, because I want to catch that high. I mean, the close of that candle. Do you see that? Remember I said what's the dominant close, and that would be this guy right here. Everyone see that? How I did that? Now again, this is an angular consolidation, but it's still made up of triangles. These are all but ugly, but they're triangles. And I'm going to draw them out. Again, these are not, oops, perfect. But I just want you to see that they are all triangular moves from the top to the bottom. And just bear with me while I do these. Okay. And this last one's kind of big and ugly. But you get the idea. It's the exact same premise. Okay, Tony's saying no. Are you missing something, Tony, or there's something you didn't understand? Yeah, you're right. They're muggly. But the market is muggly, so. And again, remember that exercise with Norman Rockwell and Picasso. Okay, Tony, when you say never mind, explain, talk to me. Okay, you've caught up. Okay. I don't like to leave anybody hanging. I missed a triangle here. This went from this bottom and touched it at the top and came back to the bottom. Same exact idea. Okay, it's made up of triangular moves. And in most cases, you'll get a minimum of 5 triangles before price breaks away. Or I remember it was the dominant candle that I missed, what you said about it. Yeah, when I'm trying to draw this line, if you remember I said I don't care too much about the wicks picking up. I want to know what was the highest price that created all that headache. And right there was that price on this line. You see that? Nothing could close above this particular price on this particular line. Once this line was in, that was going to hold everything else underneath it. Does that make sense, Tone? I'll go over it again because I always do a review every day. I review what we did the day before. So again, triangular movement. And you could trade the living shit out of this going from the bottom to the top. And when we get into indicators, I'll show you which indicators will pinpoint this, again, like with almost sniper accuracy. With me? All right, let's go down here. Here's another situation. And I'll draw this one. Let me put this down. I'll put this down here. And you see that this is the closing price that I'm using. Let me put my my markers in here, and then I'll duplicate this. Oh, it didn't duplicate. Shit. Control. And again, I'm just trying to draw something here so you can get an idea of what I'm talking about. And again, here you see it's a series of triangles. This one again is ugly, but I want you to get the premise from the top to the bottom to the top. Okay? From the top, not quite to the bottom, but back to the, it didn't draw. Okay, got to cooperate with me here. Top, not quite to the bottom, back to the top. And then in here we had this big one, bottom, top, bottom. And then we had this one, top, bottom, top. And then we had this one. And you see they're triangular moves. And once you understand that that's what's going to happen inside this pattern, you can take advantage of it. 1, 2, 3, 4, 5, 6. Usually you'll get 5. And then you can start looking for the breakout. You can start looking for price to take off. All right? So, how do we spot this as quickly as possible? Well, we learned how to spot a price trap within 3 candles. I see Calzone. Can I draw more triangles? Calzone is asking me if I can draw more triangles. I'm trying to understand what he's getting at. Now Gene is typing. Oh, Gene, one thing I have to tell you for you and the other guys that are Joe's guys, probably Friday, I'm going to dedicate Friday to you guys so I can get everybody caught up on the same page. Okay, Calzone, again, is can you draw more triangles? All right, so let me, here's one more triangle. I'm not sure if this is what you mean, but there's another triangle in here. Okay, so usually you get the 5 triangles, all right? And then you can expect a break. All right, now there's a couple of ways to even measure these breaks. If I take this and I duplicate this out to about equal the width, and from here to here is about equal from here to here, then I could use this as a potential first profit target on a breakout of the angular consolidation. Okay, everybody see that? That's how you could do it. And then I could duplicate it to the bottom also. So in this case, Control, and that's about even, I would say, right there. So then on this one, I'd be looking somewhere down here for my take profit. All right, we got pretty close. Probably would have gotten popped if we held for the full take profit. But as you know, I mentioned before, I like to use this middle line to grab some. So if my entry is up here someplace, when I get down here, I'm taking some of my profit off. Because you cannot always predict the market. And if I get this much, I'm taking it. Okay? Run like a thief in the night. And you see, we came pretty damn close. All right? So any question on that? You duplicate the width, and if you don't know, if you're not sure, you simply measure across with the crosshair. So that's 45 pips. Then I measure across with the crosshair, and I almost hit it right to the pip. All right? And then that's what I'm looking for. The other way of using this is if you take an entry here, and your stop is back there, your first take profit can be right here at this line. You follow me? And when we get into details into trading and you know, money management and all the stuff, we'll cover that. But I want you to be able to spot these. So now, how do we spot? Oh, someone give me a time frame in a pair. Okay, Daryl says H1, and Sean has Aussie New Zealand H1, so that's where we'll go. Aussie New Zealand, where is it? Aussie New Zealand H1, and I'm going to look for okay, well, here's and you guys see this? And you see I'm using this as my, actually I'll use this one. This is my main price, because at this point when this line was drawn, nothing could get above it. See that? And I'm using this price, this close, because none of these wicks, once this line was locked in, all these wicks obeyed that close. Not necessarily that closing price, but it obeyed the line created from that close. You with me on that? And now you should be able to see the triangular movements. Top, bottom, top. Okay? And I'll just draw a few of them in. There's one in here, but it's kind of narrow, so I'll just skip it for the sake of clarity. Bottom, top. Bottom, top, bottom. And thank you guys for bearing with me when I draw this, but I really want you to understand this. Again, this is consistent and repeatable. That's what I like. If it happens over and over and over again, I will do an OJ. I will wait in the bushes until it pops out again, and then I'm on it. I'm not saying that he did it, but you understand what I'm saying. Okay? 1, 2, 3, 4, 5. This one gave us quite a few. All right? And then we had a breakout to the upside. Let's throw our line up here. That's about equal, I think. And this is, what, 30 pips and 30 pips. Okay, so it broke out to the upside. And as you can see, our profit target would have been hit. Assuming an entry in this area, a stop loss back here. And we don't have to use the stop loss. Remember, we have a sniper setup we could use right here too to get into this trade with a smaller bite. But on these types of wedges, you will generally need a slightly wider stop because the market has already been ranging like this. The market is accustomed to it, so it's not a big surprise that it could come back quite a ways and possibly stop you. Okay? But as you can see, once we broke out, we did get a distance equal to the width of the original triangle. And with our stop at the back, we have 1-to-1 risk reward. And you always want 1-to-1 or better. Okay? Now, how do we spot these as quickly as we possibly can? All right, let me go back. Let's see if I can find another one. And I want to find a kind of a textbooky one. You know, I'm going to use this angular one here. As we're watching this price bounce up and down like this, what we're looking for is that first triangle. Do you follow me? As soon as we see a high and there are two similar lows, that's going to be our triangle. So in this case, this would be the high, and these are the dominant closing prices right here. You see that? Because nothing got above these highs. And then this would be our low down in here. What I want was this first triangle. Once I get the first one drawn, if it plays out, I'm already in on the first triangle. Now I've got a chance to grab 2 or 3 of the others and pick up some profit. Now Sean is saying, would you say moving the stop loss up after the trade moves X number of pips in your direction to break even? Yeah, you certainly could. When we talk about trade management and money management, we'll touch on that, Sean. But you're absolutely right. You can certainly do that. But right now we're just talking about being able to recognize where you are on the chart and how to take advantage of it. So you see that? What I'm looking for is that first triangle. I'm looking for a high and 2 similar lows on the bottom. Oh, this went all the way back here. I didn't see all this. I just grabbed the first one. But again, you see we have this high and the 2, and now could actually go up here. And you see these 2 highs locked up all of this price action. And again, we have a low. You need the low or the high first, and then you look for the 2 bottoms. And then you can start taking advantage of the triangular movements. What we're looking for is that first triangle. Okay, once we have to give up the first one because we have to let the pattern unfold. Very similar to the price trap where we need 3 candles all three have to work in unison, then we have a bona fide verified price trap. With range-bound markets, be they angular or horizontal, what we need are 3 points. We need first a high or a low, and then we need 2 lows that we can connect to give us the first triangle. Does everybody understand that? We need the 3 points to operate in unison together. If we don't have the 3, then we don't have a valid setup. Does that make sense to everybody? Lou, can you scroll to the charts to the right and progress bar by bar to show us when you would mark the triangle? Yeah, I'll do that in a second. But I just want to find a few of these just so you could see that what we're looking for is that first triangle. And I'm looking for fairly obvious spots. And this is why you guys would do homework, because you need to be able to recognize them. And I don't want to do the angular ones, because the angular ones, that's more you got to train your eye to see. Just type 1, 2, 3 for triangle for them. Well, you guys see the triangles, am I correct? Once I draw the lines, you guys see the triangles? Okay, cool. Just for argument's sake, guys, where are we in current time as far as price action is concerned? Quick exercise. Okay, Sean is saying consolidation. I agree with that. Range bound. Okay, range bound. Okay, good. Now, what we have here is that exact situation where we have that triangle. So I'm going to draw this, and then I want to duplicate it out here. You see that? And again, I've done this many times. And pretty much everything I show you, I've gone through a minimum of 100 trades on each one of them. So I know when they work and when they don't. Okay? And believe me, at least a minimum 100. But this is where we are. We are in a downtrend. And we are now in upward consolidation, which is also called a bull flag, by the way. Okay? And now, if this touches the top, I'd be thinking of taking a short back down here. Do you see that? Does that make sense? Everybody there? I just need to know. If you don't see it, let me know. All right, good. So now let's give me a time frame and a pair, and we'll try a little bit of F12. And then I want to go into bull flags and bear flags. Okay, pound yen 1 hour. Okay. Pound yen 1 hour. Damn it. Okay, but well, here's one right here. If you wanted to know, I mean, without even doing the F12, look, we've got the top. This is what I had mentioned earlier. We've got a top right here. And look, we've got the 2 points on the bottom we can connect. I didn't even get a chance to do the F12. But you see how obvious that is now? And you see why I'm picking this point? Because nothing could get below these prices right here. Yeah, we had the wicks, but nothing could get below it. Okay, so now I'm expecting this, and I don't have a guarantee, but I wouldn't be surprised to see this go back to the top and make another triangle. So you see we have the one triangle. Well, this is our first triangle. I'll do this one first. Let me just delete that, because this is the one, you know. Okay, so I'm going to do this. See that? And now what I'm looking at is something like this. So I'm looking for this to come up in here somewhere. My triangle drawing is not ideal, but you get the idea. And Kimberly is saying this could be a potential head and shoulders. Yes. Very good eyes, Kimberly. All right, and there are a couple of head and shoulders here where this could be the head, this could be the left shoulder, this could be the right shoulder, or this could be the head, and this could be the left shoulder, and this, if it unfolds, could be the right shoulder. There are a couple of ways to read the head and shoulders. And it looks, now Calzone is saying, it looks like it can't close outside of that bar candle prior. Bear candle. Oh, right here. You're talking about this candle? Okay, well, we don't know yet. You know, we don't know because this candle is still forming. But now the beauty of this is, now that, and I'm going to show you how all these pieces are going to start to move together. Remember when we said when we have an uptrend, what do we get? 3 to 5 candles in our direction, 2 to 3 candles back. 3 to 5 in our direction, 2 to 3 candles back. So now I've got 3 candles long. You see that? What may happen here is I'm going to get 3 candles long, maybe 4, maybe 5. I'll get a little bit of a pullback, and then I'll get a push back to the top. So you see how what we learned earlier comes into play here. Look, here's our push up. 1, 2, 3, 4 candles up. And lo and behold, we have pullback candles. And when these pullback candles break this line, we know where our next likely target could have been. Okay, now I know that I drew this line before this was here, but I want you to get the premise, because this will play out over here somewhere. So you see how everything we learned about watching price action comes into play now. So we know that this is the range, but even in the range, we're going to get typical price behavior. So here we have a touch at the top, it pulled down, and look, pullback candles. Then dropped down, and then another pullback candle, and then it finished it right to the bottom. Okay, and now it's pushing up. We may get 2 or 3 candles back, and then push up again. So I want you to see that by understanding price action, understanding the DNA of a trend, understanding what candles you need to make an uptrend and a downtrend, and understanding that all trends behave in a similar fashion, you can see how this comes into play now in this range-bound market. So you are no longer in the dark. You can look at this and say, where am I? Well, I'm at a 3-candle push up, a possible pullback, and then a push back up to the top of this wedge. Everybody see that? Okay, now the DNA of these triangles. I generally like to see triangles that are at least 5 candles or more 5 candles or more wide. The wider, the better. Okay? So again, each formation has a certain block of candles that I like to see. A instant reversal is 1 candle, turns the whole market around on that 1 candle. A price trap, like we have here, is a 3-candle formation where we have this candle, and then the next 2 candles could not close above the high or low. You need all 3 candles in unison. You follow me? I like to see the price trap. Here's one that I could have drawn a line on, but we never got a turnaround here. Okay? So what you're looking for, by the way, when you want to draw these triangles or when you want to start drawing your trend lines, is you want to see the high, which we have here. See, that's the high. And now we have a swing bottom here. And by that I mean we have a point with 2 lower candles on either side. A point with 2 lower candles on either side. I need to see that over here also. If I had a point with 2 candles on either side, then I would come in and I would draw my marker for my possible wedge. to go back and forward in a sideways market. Okay, do you understand that? You have to have all the pieces of the puzzle or you don't have a valid trade. So look here, we had the bottom. Price went up, okay, came back to the same similar point and made another bottom where we had a spike or a candle and two higher on either side in this case. That's when you would want to draw this. If you don't see that, then you don't have anything to draw. And you see how in this particular scenario, right here, we didn't have a spike. We needed this candle, and then we needed two more higher right in here. Does that make sense? I think it was Tony wanted to do the F12. Okay, you got it? All right. Someone give me, and for anyone that's looking at this pound yen, keep an eye on this. Let's see how it unfolds by tomorrow. Okay. The other thing that happens with these ranges is that when you see a range like this that's pretty uniform and tight, I promise you on a higher time frame, it's a big ass price trap. Okay, so let's just take this area here, and I only have these two red lines, so it should be easy to follow. Let's go up to like a daily and see if we can see the price trap in here somewhere. Oh, there it is, right there. This is a potential price trap. You see that? From here, this high, to this low. This candle started up here, but could not get above this high. Right now, it's trading back down. So we may end up with another candle in here, giving us a big-ass price trap on that higher time frame. Let's go down one more, see if we can get some extra candles in here. Okay, so here we are on the 4 hour is not as conclusive. You see we have these two candles. If we go out to the daily, you can clearly see that it's this one daily candle is a potential price trap here. Do you see that? Okay, Sharon is saying, can you talk about recognizing price traps? Okay, Sharon, were you here for last week and the early part of this week? Oh, this is your first day. Okay. I will get to that as a wrap up toward the end, Sharon. Okay. Yeah, Phil's saying it's in the recording. So these sessions are recorded. All right. Let's go back to, where were we? The 1 hour originally? Yeah, so we're going to keep an eye on this price trap. I mean, on this triangular formation. All right, and remember, in order to properly draw the triangle, I need a low, a swing. See, here I could have drawn one right here. Okay, you see that? Here's my high, and here's my two swings. And I could have certainly done this. And that would have been triangle, another triangle, and then it eventually broke. It didn't give us 5 to 5 touches. But it certainly gave us one triangle, and when it broke out of the box, okay, we could take it for the width of the box. And let me just duplicate. Let me just see what this is. That's 80 pips. That ain't bad. So we go 80 pips down from here, and you see it did that pretty easily right on the next candle. But do you follow me? Somebody will, I think Daryl can post a link to the other lessons. Okay, any questions here so far? Okay. So we see how this works. Now, I do want to try the F12 thing. And again, I'm looking for like a large grouping of candles separated by some distance with a peak on the bottom. But the way this works, a lot of times you're going to turn the chart on and it'll be right there in front of you. You just weren't taught to recognize it. You know, they after this bounces 4 or 5 times, that's what you always see in the book, but they never tell you how do you catch the first one. That's the one where I want to make the money at, is the first one. Here was another one we could have drawn. This high, and you see these two lows with the swing point. See that? We have a low with 2 higher and 2 higher. We have a low with 2 higher and 2 higher. I could have put a line here and one here. That's the beginning of our wedge. It happened to break out, and I bet you it gave us a distance equal to the wedge. Because sometimes they break out very quickly, and there's nothing wrong with that. But you want to expect. Okay, and it pretty much got very, very close. And again, I come in a few pips off the top of this. But I certainly could have grabbed half of it. See that? Which is 50 pips. And I like that dot in the middle of these lines that MT4 draws because you can use it as a nice halfway point. So the other thing I have to figure out is how to do a screen share where you guys can draw the trend lines and you know, catch these. Delete. All right, someone else give me a time frame and a pair. Okay, dollar CAD and dollar CAD 1 hour. Okay, so I'm going to go with bull hamster on dollar CAD. Okay, I'm not seeing it. Oh, there it is. Dollar CAD. And everybody likes the 1 hour chart. Oh, you know what? Let's just do this here. So here's my point. Tony, see that? I got this, and I've got a high up here. What I'm looking for is another high to form, and I've got about 8 candles already, so that's good. If I get something to form up here near this high, then I can pop a what do you call it? Okay, but let's just see if we get one. Nope, never happened. Okay, but I've got one here. You see here? I've got this high. And I've got, nope, I don't have a swing low here. I've got this low. I need to see if you see how I've got this one candle spiked all the way down? I have 2 higher on this side. I need 2 higher on the other side in order for it to be valid. Does that make sense, Tony? Oh, F12. Okay, I got 1 higher, and I don't have 2 higher. You see that? So that's not valid. Make sense, Tony? Okay. Now my only other high right now is this high right here. See, this is the last dominant high. So, and I've got like 8 candles already. So if I get a high that comes up near this, then I can pop a line. You always look back to the last dominant high. Okay, good. So now I would pop a line here, and I would pop one here. And you understand why I'm picking this point. Because out of the 1, 2, 3, 4, 5, 6, 7 wicks, nothing closed below here. And right now I'm picking this high because I have no evidence that anything has closed above here. If this breaks out from this point, I'm looking at, why is this? Ah, damn it. I didn't want to do that. Where am I? Oh, I'm still here. Good. Okay, good. If this breaks out, the width of this is 30 pips. If it breaks out right now, I'm looking at 30 pips up to like in this area here. So let me put a line up in here. I think it was this area here. All right? If it breaks out right now. If it doesn't, then I'd be looking for 30 pips the other way. Okay, so we see this held now. So then our thoughts would be it could come back down here. So let's just do the F12. Aha, broke out. Okay, there you go. Okay, didn't come back down here, made a new swing, and when it broke this box, broke this high, it went right there to the 30. You see that? As I said, if it breaks out right now, it's going to go back to this high. And this relates to this high here. Does that make sense, Tony? Where I would have entered long, I'm always looking to be cheap. I try a sniper in here somewhere. And you could certainly enter here at the close. Generally, when you get a really big candle like this, I don't like to chase it. So I may do a sniper in here. You follow me? I may put a line in here. And remember, in an uptrend, the bottom wick forms first. So I would go back here. I'd wait for the bottom wick to form, and then look for an entry above this line using a small stop. All right, so you see that once we get the first triangle, it's either going to break out straight away, as I mentioned. Now this one had a bit of a pullback, or it's going to bounce off this and come back down here. And you see it did bounce and make an attempt to go short, but we don't know. This looks like news. All right, when you get a dramatic move like that, I got to get another mouse. Oh, 1,300 hours. Okay, I'm trying to figure out 1,530. So this is somewhere in London. So this is probably news that caused this. But you see the premise, Tony. You got it? So it will either break out immediately and go the width of the triangle, or it will come back and touch the bottom of it. But you've got plenty of time because these are 1 hour candles. So it's not like you got to rush. Oh my God, you can come back once an hour and double check it. Or put this line in the sand. Mark this. And you could say triangle, top, triangle top, breakout long. Put it there, then go about your business. And if price comes back to it again, you know what I mean? You could say, oh yeah, what is this line here? When you were doing F12 and moving a horizontal line, I'm trying to understand what he's saying. When you are doing F12 and moving a horizontal line, don't move mouse left or right. No, I understand that, but sometimes this platform gets quirky. I go to grab this line. You see what I mean? I'm trying to double click on this, and sometimes the whole chart moves. It's kind of hard to. It's just a quirky thing. All right. Okay. So, any questions on that? What I want to see in a triangle is I want to see a swing point. Here, a swing point where I have a high and two to the left, two to the right that are lower. In this case, it's a downtrend. And I want to see a swing point bottom, and then I want to see a triangle. It could be a horizontal triangle, or it could be an angular triangle. The angular triangles will take a while to see, but I just want you to know that they are just as powerful. Absolutely as powerful as horizontal. When you see that first triangle, pop your line across the point and connect the two highs or lows. And then watch. It will either break down immediately and come back and keep the triangle going, or it will break out. And you'll know fairly quickly. It won't take a lot of time to figure it out. Yeah, Daryl, the new MT4 is going to potentially be a mess, and a lot of people have been talking about moving over to CT Trader, or to C-Trader, I should say, which is the platform that Pioneer Trading Academy uses for their people. So I've been, because I have a lot of robots that I built, and I had a lot of special indicators for that purpose. And I've already had problems with getting some of them to behave properly. So I may move away from MetaTrader 4 and go to C-Trader. And CTrader is written in C sharp, which is easier to write for and all that other stuff. Um, yeah, there are bugs with the MT4, and I know what you're saying, Daryl. You're saying that MT4 gets bogged down with a lot of old data and stuff. But with this new update that's coming, I have no idea what's going to happen. Um, well, TradeStation right now is no TradeStation just bought Interbank FX, by the way. And when I say bought, I think it was last year sometime. So Interbank FX is in the TradeStation family. So I'm not sure, how all of that is going to work either. But I like my automated trading. I like my robots, and if I have to